Hi there. Welcome to our weekly session that helps you avoid FOMO and panic. We'll cover Bitcoin, ETH, as well as Bitcoin Cash. As usual, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. Remember, the dashboards are now currently available for free on Substack and SLX. Let's start with the very first chart at Bitcoin. This is the weekly chart of Bitcoin, and surprise, surprise, without surprise, that it's got restrained under the 74K. So we talked about this many times, right? For the past 8 weeks. Whenever Bitcoin dropped to this range-bound level between the 58.5K to the 63K, these two lines, the orange key level and the yellow key level, okay, you see the lowest point over here, right? It basically bounces back up just to get, rejected, or the bulls hammered the price back from the 74K. There's only 1 week, back in mid-March, the bulls were able to push the price a little bit higher. So that's why we've got this channel box over here. Imagine it's a playground of the bulls and bears, determined by the big guys, all right? Whether you call them the composite man, the whales, the institutions, it doesn't matter. Just the big money, okay? And this playground, if you're new to my sessions, imagine it's like an air hockey table, right? The price bounce between the boundaries. Sometimes you can see the price bounce along the center line as well. That's where we have got to this week, when the price stopped somewhere between the 74K as well as this white solid line, is basically somewhere near the center line of the box. Okay? Just to give you a brief idea at this moment, I'm going to take this out because at the end of the day, we expect it to swing within the channel, whether it swing halfway, come back down, and then do a few more times before it goes up, it doesn't matter. So this is the backdrop, what happened over the past few weeks. And in terms of Wyckoff stage, after showing a sign of weakness, we said, okay, we count those as LPSY, last point of supply, meaning you can call that mini rebound, okay? And I also showed you in previous sessions comparing the 2020-21-22 distribution cycle. These blue tags are all distribution cycles. There were 2 periods that looks very similar to what we are going through right now. Okay, the similarity is that the price went through the first formal buying climax, likewise this round, and then an up thrust. All right. On the left, back in October 2021, this one somewhere around September, October 2025. Okay, and other coincidence, exactly 4 years later, we had another up thrust, and then the price started to fall. And initially, there was a mini rally, like what we had back in end of 2025, beginning of this year, and then further dropped to have another mini sideways trading. Okay, it's not even a rally back then, but this time we see the price did a little bit better, because that's why people say history doesn't repeat, but it rhymes. Back then, in 2022, the world was recovering from COVID. Okay? Right now, it's entirely different. Okay? The Fed, they started printing a little bit of money, but we have a lot of uncertainties looming. We have a war in the Middle East. We don't know whether that would end or not. Soon it will end, in future, that's definite, but how far in future, nobody knows. And then also, this war triggered a lot of inflation worry or stagflation worry. The Fed initially people think it's time for the Fed to lower rates, right? But because of the war, that's not going to happen yet. Okay, not until all the uncertainty are cleared. So geopolitical, economic, that's everything going crazy. And asset prices, precious metals, oil, all through the roof. So people have been jumping around, hedging those runs in order to maximize their gain. So that's why we're seeing these kind of differences. Okay, we don't want to lose the context. When we look at the chart, yeah, it looks similar, but we have to understand what's happening around the world. What's the backdrop causing the differences? Okay, so let's go to the micro view after understanding where the Wyckoff stage is. If Bitcoin is really coming back for the accumulation cycle, okay, it doesn't have to go back to the same level like last time back in 2002 all the way to late 2023. Okay, I shared previously. Okay, if you assume Bitcoin's base price has an inflation or deflation factor, okay, you basically assume the price goes up along with time because of money printing. Okay, this white box, the earlier white solid line you have seen, basically tracks that. Okay, the bottom went higher and higher. Only exceptional case like the breakout of COVID, it went through the bottom. Okay, that was November 2022, somewhere around the interest rates climb. Okay, if we put in, let's see whether I remember it correctly. Yeah, so when interest rates started to climb back then, the price of Bitcoin dropped to the lowest point, and then it resumes and created a new all-time high. All right, so now that's where we are expecting if it really comes back down for accumulation. Okay, that means the price coming back down to somewhere between this red key level 51.5K all the way down to this orange line of 30,000. Okay, if you look at the timeline, it's still possible that it hits the orange line. But along with time, with more money printed, the base price may get higher and higher if this hypothesis holds true that this long-term playground do exist. Okay, this white box. If it does work as what it means, okay, that along with money printing, because base price will continue to go up. But if it's wrong, that means it should be a flat bottom, okay, that the price can come back to the 16,000 level, just like the 2020 COVID period, or even the 2022 interest rates period. That's still possible given all these looming events, including the private credit crisis. So we don't know how much money, how much cash people would need if such things burst, including the AI bubble as well. Okay, if everything bursts altogether, there would be a lot of people needing cash, to fulfill their margin call or whatever debt they have. So by then, they're going to probably cash out on Bitcoin, and that's what's going to drive Bitcoin's price to its lowest possible level. All right. Now, daily chart. Let me maximize. Last week, we talked about April 9th. So we said somewhere when we get closer to April 9th, because Bitcoin's price is going through both an ascending trend, a bigger box over here, bigger playground over here, and the short-term trend, the smaller playground. These two, the ceiling and the bottom, crosses in this stage. So when we get closer and closer, we'll get a decision, because there are only two options. either the players allow it to break below the support of the uptrend, or they confirm the uptrend will continue. This uptrend is not those straight line up, right? This is just a gradual, you can consider a mini rally kind of uptrend. So we get the confirmation. The uptrend is continuing. But if you look at the volume, it isn't really the case of, like I said, those parabolic climbs. It's actually somewhere around average across the past month and a half. Okay? So neither side, not the bulls nor the bears, have put in big commitment as they did back in the beginning of February. Okay, you see the volume back in the beginning of February. Even late Feb and beginning of March, those periods were way higher than where we are now. So people are still waiting, okay? Waiting for news, for clarity before they make another move. So base case, still range bound, but you can consider the 74K still a very strong resistance with the upside potential of hitting or testing the ceiling of the uptrend. In this case, it is getting closer and closer to the 80,000 blue T level. Okay? You're seeing that, right? By the end of the month, technically speaking, the price can come up to test the ceiling and the 80,000 at the same time, somewhere after April 27. Of course, it can happen a little bit sooner and give us a wake and then get rejected back to the box. Those are all possibilities. Okay, I'm telling you the possibilities, not that it is certainly going to happen that way, because if you look at what happened over here, it has been rejected multiple times around 74K. So currently it is being suppressed by the same line after, the bulls tried very hard pushing through the white line. Okay, you see those 3 days over here. All 3 days having long wicks from above the white line. And eventually yesterday, it pushed up by a little. However, if you look at the volume, okay, it's more or less the same across those 5 days, right? But if you look at the price spread of the candlestick, it's not as big as this one, meaning the bulls and bears are getting equal strength, closer and closer. Okay, this day, the bulls, with that same volume, they get better strength. That's why they have a bigger spread pushing the price to a high level. But the subsequent few days, the candlestick body becomes smaller and smaller. That means the selling and buying are more or less equal. Okay, the bulls have only got slight upper hand. All right, so it is getting trickier. And as we step into weekend, again, the volume tends to die down a little, not the price wing, because whatever available on the exchanges to change for trading, people can still push the price wildly, especially with lower liquidity or lower available coins to trade. So, in short, we are seeing potential if you're positive. Okay, I already mentioned, challenge the ceiling, but the base case is still the 74K, knocking the price back, and then, come back to the 68K and retesting this support. Okay, it's getting to a key area. And when we get closer to the end of the month, here, the triangle we talked about, if the price dropped back to the support line of the uptrend, being trapped underneath the 68K, that may be the time that the price comes back down to to test the 63K, like what it did in February. Okay? Coincidentally, it is right after the ceasefire period. Okay, we have 2 weeks. If nothing surprising happens within these 2 weeks, we're getting close to the end of April. And that's going to turn the tide. Is it going to ceasefire? That's probably going to let price go this way. Or is it going to not have a ceasefire? That's going to push the price back down to here, or even the yellow solid key level. All right. Now, quickly to Ethereum. Ethereum, we already shared, it's somewhere at the early stage of accumulation. But the stage is very similar to Bitcoin. If you remember, we talked about those two LPSYs, right? Those two sideways, slightly up, relieving rarely. The volume isn't really coming down, okay, compared to the period. Let me enlarge this volume section. Okay, look at this period back in 2024. Okay, it was pretty low over here. Right now, it's still at an above average level compared to that period. Okay, so that's why I say I have to see something solid before I can comfortably say we are at the panic over stage. It looks to me we haven't arrived that yet, even though we see this bunch of bulls and bears equilibrium period that set the price around 1950. Okay, with this going up, let's look at the daily. What date indications we have? So, in previous session, we talked about the potential when we get closer to mid-April. The price, again, 2 options. Break outside of this downtrend that started half a year ago, or break below the 2135 and come back to test the 1950. Okay, so this is not the first round. Okay, this happened back in November to January, a few months back. Okay, this is another time back in October 2025. Okay, first time, second time, third time. Okay, touching the ceiling of the downtrend that started way back in summer last year. Okay, this is the date. You may see it breaking out, but when I say breakout, it doesn't mean it's going to shoot up like this. Okay, there are 3 options. One, to continue with this uptrend. Okay, let's draw a box, a playground. This is the playground. A medium term playground compared to the half-year downtrend, okay? So, assuming it continues to go up, it may eventually go and challenge these key levels above 2,500 after the 2,330, this red line, that's the orange, and then 2,700. All right, but okay, the thing is, it has to cross this line, and it's not an easy line to cross. That's why we are looking at this 19th of April date, and we are only 1 week away from that date. So any day from now till then, there is a chance for Ethereum to break outside of this box. So we were talking about, when I say breakout, it doesn't mean it has no limit. So at least we see 2 key levels as well as the uptrend ceiling. That's what it is. All right. If it gets rejected, we are getting to a point that it is likely going to come back down to test this support. All right. Again, if it does find support, this date over here, 24th of April, only a few days after the 19th, okay, it comes to another decision point. Okay. This time, same thing. Is it going to break outside the downtrend, or is it going to finish off with this short-term uptrend or medium-term uptrend because it lasted for over a month? over 2 months now. Okay. If it breaks this medium-term uptrend, that means it's going to continue with a downtrend going to retest the 1950, like I said earlier. And that gives us early May, when the price will reach this point once again and on the window to confirm. So from the big picture perspective, if you expect this is just a range bound between 1950 and 2330, okay, between the red line and the blue line. Assuming that's the case, there are cases that it dropped below. That's why I said it's a mini uptrend instead of just a sideways. It is going to come back down to 1950 if it continually get rejected and falls outside of this uptrend eventually. Okay, if that's going to happen, you know which line it's going to retest to find support. All right, and that's not a very surprising thing, because we already said if this is not where the selling climax is, or even if the selling climax has appeared, there is going to be continual testing period for the whales to check out the paper hands, leaving only the diamond hands. That's what's going to happen. That happened during the last distribution cycle and in many other, accumulation cycle, and in many other altcoins accumulation cycle as well. So it's not limited to Ethereum itself. Finally, Bitcoin Cash. It hasn't really get into the accumulation period yet. So quite similar to Bitcoin, it is showing some kind of second round of mini rally after another sign of weakness showed up. So this round, it is a little bit different compared to last time. Okay, it looks more like Bitcoin now. We see the buying climax FOMO right there, and then the upthrust, and then it comes down for the first and the second mini rally. Okay, so supposedly it is going to come back to accumulate, but I also shared a few sessions back, or maybe even last time, there's something in Wyckoff method called upthrust after distribution. So after the initial FOMO, the second FOMO, there can be another round that shoots about those two. Same case for Bitcoin Cash, same case for Bitcoin. Bitcoin hasn't had its upthrust after distribution yet, but it's not a must that it happens. Okay, I'm just telling you the possibility. So if it doesn't go back to accumulation after a bit of sideways, there may be a slim chance that it go retest the blue key level 679. Like what it did back in November 2025, sideways for a while, and then shoot up, making a higher high than the initial FOMO. All right, so I'm trying to show you the possibilities instead of just telling you it's going to come down, it is going to come down. That's not the case. Okay, I already explained before, depending on what kind of news that's going to, or what kind of events that's going to trigger the different level of liquidity and risk on sentiments, that's going to turn the tide. So charts, we're looking at historical stuff. Events that come is going to change the shape of the chart and the direction of the charts. Okay, if you look back in history, you can find explanations why those spikes happened. Okay, maybe interest rate changes, new regulation passed, and anything that lines up for a couple of weeks, that's sufficient for that kind of rally. Right? This obviously lasted longer because of anticipation of a lot of good things with no, I would say, no negative sentiments popping up during those times, since like early 2005 all the way into late last year. until the point people start to see, okay, precious metal price could started going up and all that. Of course, people would argue Bitcoin or even Bitcoin Cash in this case, they front run the market, especially stock market. So they are leading indicators. Some people treat them like that, and it's fine. You look at them that way, because the explanation of people looking at these, at least for crypto, is that they can be cashed out quickly. So when the market isn't working as those people have speculated, they need cash to pay off their debt. Okay, that's why they're cashing out from crypto. All right, so there are always narratives and stories behind. But one key thing over here, the volume of Bitcoin Cash has been dropping consistently since February. So be cautious. If this trend continues, even if you have your mini rally, that's probably not going to last. Here, daily chart, a lot of dates for BCH. April 6th, already passed, we can take that out. So we talk about this. The price was traveling along this medium-term uptrend, and then it fell through the support line on the second. Okay, let's adjust this by a little so it's more tight. Okay, and obviously the April 13th, 14th date hasn't passed yet. Only 2-3 days yet left. Technically speaking, the price can come up again, but because this is a box of the previous trend, so this doesn't hold much value. More important is this 20th of April, and then eventually 29th. Because when the price comes back down, you see the price has been suppressed, okay? It did not pass this invisible resistance line over here. Here you see support, 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 and then now it becomes resistance. And this is another resistance. Imagine this is a downtrend, especially this long red candle that is started from over there. And then let's tighten up the box or the channel, the playing field. Okay, let's assume that is what it looks like, because we only have very few reference points right now. If the trend extends, we can adjust further. So let's tighten up the date. That turns into 18th right now after adjustment. So the price, especially today, is getting a little bit of rejection, not too big of a commitment from the bears. Okay, very low volume, declining all through the 7 days. So it's getting towards the triangle. Again, two options. Break outside of this downtrend, meaning it's supposed to be the base case. The sideways trend trading between 427 and 482 continues. Okay, bounce, 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 bounce. But if it breaks, if it still gets rejected from the ceiling, the chance is it's going to retest 427 and may drop below, extending this trend. And it's not surprising, just that it's dropping earlier than it touches the ceiling of the bigger downtrend. Okay, whether it was within this uptrend or currently within this smaller downtrend, both smaller trends are within this bigger trend. Okay, same thing for Bitcoin, Ethereum. The big trend started somewhere, either summer or late last year. Right? Different coins, different timing. But as long as they don't go outside, they haven't gone outside of this downtrend, we won't be able to assume that an upsurge would happen unless, again, similar to the war that broke out, in reverse, some crazily good news, unexpectedly good news come out. That's going to make the market go crazy. But right now, we don't see that happening. All right. Until that happens, the more prudent way to look at this is by measuring. I'm trying to update the state. By measuring these crossover points in the trends. All right. If it doesn't break outside of the box, doesn't break outside of the playground, assuming you're playing a football game, right? You're playing the ball within the field. Nobody is going to kick the ball outside the field and then start playing over there suddenly, unless there's a good reason. So even if a wick goes outside, people will pick the ball back and then play within the field. That's the theory. All right. If you're interested to access these sessions 2 days earlier, like the members currently, join them now. This is the YouTube channel membership that I'm talking about. And also, you can go to Substack, subscribe to Asset Lens, and take a look at the dashboards, one with macro market and one with the crypto market. See you in the next video. Thank you.